temporary 30-day waiver to allow India to purchase Russian oil stranded at sea fails to enthuse Indian oil refiners. Stocks of upstream and downstream oil and gas companies continue to be under pressure as crude prices remain elevated.
Brokerages UBS and JP Morgan issue caution on Indigo's earning potential as crude prices spike and air travel is disrupted on the back of the war in West Asia. JP Morgan is neutral on the stock with a target price of 4630, while UBS maintains its buy rating with a reduced target of 5,480.
Moscow Dot surges nearly 10% as it says that it has completed negotiations and is awaiting approval for its 99,000 crore rupee submarine project. Now, this is the second day that we're seeing the stock run up in the trading session, up 18% in 2 days.
Consulting and AI product firm Fractal Analytics reports strong revenue growth in the third quarter, while margins also expand. The management tells CNBC-TV18 that the company will also be a net beneficiary of the AI boom.
And DCX Systems wins a 68 crore rupee order from HAL. The stock surges over 10%.
Hello and welcome. You're watching Chartbusters live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Batra and with me is Vinny Motiwala. Well, it's turning out to be a session where it's definitely volatile for the markets at this point in time. So we have the Nifty, which is down around 133 odd points, but the broader markets are just about holding their head above the water with a gain of around 0.2%. On a week-to-date basis, not looking great for the markets. We have the Nifty as well as the mid-cap index, which has dropped around 2 odd percent. For today, the advanced decline ratio, however, holding up on the advances side. So let's see whether that sustains. Around 2,200 stocks advancing to around 1,400 stocks declining on the Bombay Stock Exchange. Hi, Vin.
Hi, Ekta. Good morning. So while obviously that's the headline indices, important to watch out for advanced decline ratio, but some of the names that are buzzing or moving around in the broader end of the market, let's pull up the shipbuilders names, right? We have Moscow Dot, Garden Reach Shipbuilders, Cochin Shipyard, all of them are buzzing in trade. Last few trading sessions also, they have moved up in the trading session. While today, railway stocks seems like they are making a bit of a comeback. So, Jupiter Wagons, Ircon International, we have Titagarh Rail, all these railway names also, RVNL, Railtel, all of them are managing to hold on to gains. So that's some individual names that are moving around in the trading session as well. But on that note, let's welcome Manish Hathiramani of Deen Dayal Investments for a technical check on the market. Manish, good morning. Thank you so much for joining on the show as always. In terms of levels that we should keep an eye out on for the Nifty, what is going to be the key now? Obviously, geopolitical uncertainty is the main reason that we see this volatility coming in. But 24,600 around that mark today is what the Nifty is at.
Good morning, Vinny, Ekta, and all our viewers. Thank you so much for having me on the show. Well, 24,300, like we have mentioned before also on the show, is a very strong support for the Nifty. We have bounced from there after the recent fall. We need to really watch this level very closely, as a break of this level on a closing basis can result in the index falling another 400 odd points, anywhere between 23,950 to 24,000. If we have to bounce, we have to bounce from here. On the upside, we have a resistance around the 25,300 level.
Okay. All right, Manish, welcome to the show. Just wanted to start by asking you about these frontline stocks today. So Reliance is, top of its game today. It's the top gainer on the Nifty. It's up around 2 odd percent. But then we have stocks such as ICICI Bank, which has lost around 4 odd percent this week. It's lost around 2% today, along with the likes of Axis. So if you had to choose between, say, the banking space and maybe a couple of these gainers on the Nifty, what would your strategy be and why?
It's a coincidence. In fact, Reliance Industries is one of the buy calls which I've got for today. So I'll answer the question first on that. Reliance is a buy for a target of 1460, stop loss of 1370. This stock has closed past its resistance level of 1360 with good volumes. It has now even crossed the intermediate high of 1412, which was recorded on 26th of February. The other buy call is on NTPC, which is for a target of 392, stop loss of 370. Similar situation like Reliance, where the resistance of 377 was crossed on good volumes, And this morning, we even crossed the intermediate high of 385.20. Coming to the question of ICICI Bank, well, that's because Bank Nifty seems to be under some pressure. As 58,600 to 58,700 is a level of support, and we are currently trading below that. If we close below these levels, we can crack down another 1,000 points to 57,400.
Okay, surely we'll keep an eye out on ICICI Bank and that level over there as well. Manish, your thoughts on the railway names right now? Today seems like they're making a bit of a comeback. But anything that you've looked at in terms of charts, whether Jupiter Wagons or Ircon International, anything in the space?
Jupiter Wagons, in fact, I was looking at it this morning and some of the other names too. We do have a lot of volumes from a daily chart perspective. Also, there is an outburst, but it's too soon to really comment on a trend. The trend continues to remain down. This might be just like a knee jerk reaction on the upside. We will need to evaluate it over the next few days.
Okay. Surely you will be evaluating it. And anything in terms of the IT pack that you're looking at right now?
So I did see some bounce happening on Infosys this morning, but it has really gone sideways. We really need to see a couple of days of closing and then evaluate for the upside.
Okay. All right. Manish, any view on Interglobe Aviation? That stock is under pressure today. Brokerages are a bit cautious on it. It's lost around 8% this week and, 12% of its market cap on a year-to-date basis. How would you approach Interglobe?
Interglobe on the chart, Ekta, is a one-way down. Any kind of bounce up is only going to be looked at from a shorting perspective. However, since the fall has already been so deep, we really don't have an immediate entry on the short side either.
Okay. Manish, thank you so much for joining us this morning and giving us your view in terms of the market as well as individual stock names. But on that note, we're going to shift to a special segment where we will get you ideas of profit from Money Control Pro. Varsha Bang of moneycontrol.com joins us now to talk to us about the stock that she's been tracking closely. Varsha, are you looking at Saregama India?
We like Saregama India, one of the oldest and fastest evolving music IP companies. The core music business continues to deliver steady momentum with revenue growing 11% year on year. This growth is backed by consistent investment in new content. In the recent period, the company has added 1100 new songs across Hindi and regional languages, which keep its long-term monetization pipeline strong and active. However, profitability in the near term can fluctuate. That is because content costs are incurred at the beginning, while revenues come in gradually over the life cycle of the music. Even so, the business itself remains stable. It is supported by strong legacy catalog along with the steady stream of new releases. As the new content begins to contribute more and catalog income remains stable, margins should gradually improve over the time. So the growth is being driven by more monetization of fresh music while the legacy library continues to compound steadily. The company has also made strategic investment in Sanjay Leela Bansali Production House, which provide access to premium Hindi film music. With content investment nearing their peak and operating leverage improving, we believe the company offers a steady IP-led long-term growth story. The stock is trading around 21 times FY28 earnings. Valuation look reasonable for long-term investors.
Okay, all right, Varsha. Thanks very much for that. So that's the view coming in on that particular stock. Well, for the markets, it's currently down around 0.5%. Just watch out for a stock such as Cohance Life, because that stock is a CDMO play. It's seen a huge disruption in terms of in terms of the stock performance this year. It's lost around 46% on a year-to-date basis, and today as well, it's losing a little more ground. So down around almost 3% for Cohance Life. We'll take a short break, but we'll get you a lot more on the markets and stocks once we're back. Stay tuned.
Welcome back to Chartbusters on CNBC-TV18. Now, as the war in West Asia widens, data assessed by CNBC-TV18 shows that 2,325 flights have been cancelled between February 20th and March 5th due to West Asia airspace disruptions. Now, Madhya is joining in with us to give us more details on this one. Madhya, over to you.
Well, 7 days since the conflict started, and it has caused major turbulence for global aviation, not just India. The impact has been huge, but the severity is understood with numbers, and the exclusive data accessed by CNBC-TV18 shows the scale of disruption. So since the 28th of February till the 5th of March, over 2,300 flights have been cancelled due to airspace restrictions across the Middle East. Out of these, 1,770 flights were cancelled by Indian Airlines, while 555 cancellations were by foreign carriers. The passenger impact is massive. Nearly 3 lakh travellers have been affected so far, and around 16,000 passengers were stranded across different Gulf airports as of the 5th of March. Airlines have been trying to bring passengers back. On 4th March alone, 28 inbound flights operated from the Middle East brought back about 5,300 passengers to India. Over 36 flights were operated on the 5th of March. Now, if we look at the day-wise cancellations by Indian Airlines, the numbers clearly show how severe the disruption has been. On 20th February, about 196 flights were cancelled. That jumped to 348 cancellations on the 1st of March and 357 flights on the 2nd of March, which was the peak of the disruption. After that, 319 flights were cancelled on the 3rd of March, 269 flights on the 4th of March, and on 5th March, airlines cancelled 281 flights. So the cancellations continue. If we break this down airline-wise, Indigo accounts for the highest cancellations at 806 flights so far. That followed by Air India Express with 580 cancellations. Air India Express has a huge presence in the Middle East. Air India with 229 cancellations in 6 days. SpiceJet with 123 and Akasa Air with 67 cancelled flights since the 28th of February. And the reason this disruption is continuing is because several critical airspaces in West Asia, as we know, are still either closed or operating with heavy restrictions. Tehran, Baghdad and Damascus remain shut till the 7th of March. Tel Aviv airspace is closed till the 9th of March. And Kuwait, Doha are operating with rolling closures, extending their airspace closures depending on the security situation. The UAE is partially open, so some flights are operating via UAE. Jeddah in Saudi Arabia is accepting flight diversions. This is the most safe corridor so far. And Muscat is open but with operational restrictions. So for now, airlines are still rerouting flights, cancelling services and reviewing alternate air corridors to get passengers from Middle East to India, which means the disruption to travel between India, the Gulf and even Europe could continue in the coming days as well.
Okay, all right, Maidhi. Thanks very much for that. So the aviation disruptions do continue. But we're also looking at Interglobe as a stock, and the brokerages seem to be a little cautious on it. Vinny, tell us more.
Hi, so Ekta, absolutely, like Madhya was also saying, aviation, obviously these companies have gotten impacted. And what brokerages are also highlighting, now JP Morgan is maintaining its neutral weighting on Interglobe Aviation. They're given a target price of 4,630 rupees. Cautious stance, obviously that continues. Now, obviously believe that the headwinds that one could see because of the fuel cost as well as non-fuel cost increase and all of those issues will become a major reason. While there may be some flight cancellations which do weigh on it, but fuel cost also accounts to a major component of their overall cost, which in turn impacts the profitability of the company. Now, obviously, there is a limited scope of increase in terms of yields that one could expect now coming in for Q4 in terms of the numbers. Domestic air traffic right now, what JP Morgan is highlighting, seems to be a bit tepid, and international also now is seen moderating as of now. So that is something that becomes a concern. Fuel prices, like I said, in February have already started rising because of this conflict that has been going on. So that is why JP Morgan is cutting their FY26, FY27 EPS by 13 and 14% respectively due to the higher fuel cost. Now, apart from that, what UBS is also saying, they've actually cut the target price to 5,480 rupees. They're maintaining their buy rating. Ongoing conflict, they believe that the available seat per kilometer, the ask rate, that could see a bit of a near-term pressure that could come in for the company. They too highlight about the crude issues. Rising crude prices becomes a major headwind that could impact the Q4 FY26 numbers. And in the near term, maybe this could impact overall the company's performance, and even in terms of valuation, they're a bit more conservative right now, is what they're highlighting. So geopolitical risk, Ekta, continues to be a big pain point for Interglobe Aviation.
Yes, for Interglobe Aviation, and as you can see for the markets as well. Vinny, thanks very much for getting us that update. Well, for the mid-caps as well, it looks like it's going to be a tough day. It looks as though it's possibly just about going to slip into the red as we speak. The Bank Nifty at the low point of the day, down around 1%. So financials really are taking the brunt in today's trading session. We'll take a short break, but a lot more in terms of stocks once we're back. Stay tuned. Welcome back. Well, definitely a weak day for the markets at this point in time. We have the broader markets which are under pressure now as well. So the advance decline ratio, in fact, has rapidly worsened. So we have the advances which have reduced significantly as compared to the declines which have climbed. So maybe that graph should come up for you, and you'll probably see a little bit of a crisscross taking place. As you can see on your screen, there are more stocks which are now possibly going to decline as compared to advance. So there is this fresh wave of selling which is taking place for the markets. The Nifty at around 24,600 odd. We have the broader markets, the mid caps which have now slipped into the red, and the Bank Nifty which is under pressure, down around 1.1%. But within this entire space, there is some amount of green spots which you can find. So for example, Fractal Analytics is holding well post its Q3 numbers, so that stock is up around 7%. But the other stocks in focus are defense-related plays such as Masgon Docs and DCX Systems, which are in fact surging on order-related news. So what is this news? Ria is here to tell us more. Ria.
Well, yeah, starting off with Masgon Doc first, the stock is up over 7% today after yesterday's 9% move. And the company has issued a clarification with respect to the reports yesterday regarding the 1 lakh crore P75I submarine order. The company has said that the negotiations with the government have been completed and the proposal has been taken up for approval by the authorities. And this is in line with what the company has said earlier as well after the end of Q2. And the company had also earlier highlighted that the P75I submarine order is likely to come in by the end of this financial year, which will increase its current order book by 5 times. The order book at the end of Q3 was roughly 24,000 crores. In terms of DCX Systems, that is also up roughly 14% today after receiving an order worth roughly 68 crores from HAL for the manufacture and supply of custom-made antenna and power supplies for airborne applications. And the order book of the company at the end of Q3 stood at roughly 2,600 crores. Now, the stock has performed well today. Even in the last 1 month, it is up roughly 21%, but down 20% for the year. And even since its listing in November 2022, the stock is still down 35%.
Okay. Thank you so much for that, Ria. But Fractal Analytics, like Ekta was mentioning, right, the stock is buzzing in trade. They reported a good set of numbers in Q3, and we actually managed to catch up with the management of the company. So listen into what they had to say in terms of the quarter gone by outlook as well as Q4 outlook for the company.
So in the TMT segment, we had 2 client-specific issues because of which our revenue declined. Otherwise, in general, for the 9 months, our revenue still increased. But for the 3 months, it declined because in one client situation, the client is not doing well and they're undergoing a restructuring inside their own organization. And this is not a typical Fractal client in the sense that they don't follow the 10, 20, 30 rule for Fractal, which is companies that are 10 billion revenue, 20 billion market cap, or have 30 million customers. So this doesn't follow that rule. And this company obviously went through some restructuring issues. The other one is a place where they have decreased their spends. So if you not account for these 2, I think overall the business continues to be good. Across all verticals, across all segments, our business continues to grow really, really well. Healthcare, for example, grew by 78% year over year for this quarter.
Okay, and the stock managing to hold on to good gains. But with that, we are absolutely out of time on this edition of Chartbusters. Even the mid cap has moved to the red, so that is something that you all should keep an eye out on. But thank you so much for tuning in. Up next, you have Trading Hour to take you through more in terms of the market action.